Welcome back to the channel, guys. Today's topic will be understanding break of structure and change of character. I hope your week was good last week. I hope you guys are profitable, and I wish you also a profitable week this coming week. So let's get down to the video. Understanding break of structure and change of character. Now, for a basic understanding of these two concepts, we have to be abreast with the knowledge of market structure. I put out a video on my YouTube last week that fully deserves market structure for you if you are a beginner or if you are on an advanced level in trading but you don't fully understand what market structure means and you need like help or guidance. You can check out the video around this portion of my screen. So when you are done with that video, you can come back and let us continue with this next concept, which is break of structure and change of character. Now, from market structure, we know that there are three basic types of structures: the uptrending market structure, the downtrend or bearish market structure, then the range. For us to understand break of structure and change of character, we have to be dealing with these two market structure. We don't have business with ranging market structure if you want to understand or apply the knowledge of break of structure and change of character. So let us deal with a bullish trend, for example. Let's start with a bullish trend, then we can go into a bearish example later. So on a bullish trend, let's assume we are all familiar with a bullish market structure. If you are not, like I said, you can watch my previous video. So let us say the market is progressive in a bullish direction, uptrending. For us to validate and verify that this market is uptrending, we said we have to see consecutive higher lows and higher highs. So this is the criteria for us to determine whether a market structure is uptrending or otherwise. Now, in a trending market, whether uptrending or downtrending, there's something we specify as a break of structure. For the market to create this higher low, then turn around, then create a new higher high structure, it definitely passed the price that this initial higher high was. For example, this higher high was on price 5001.86. For this market to create this new higher high, it exceeded this price. That means it broke out of this price. So to simply put, it broke this structure. Similarly, the same thing happens here. After this higher high, there was a higher low. Then a new higher high was created. Price definitely passed or surpassed this value, 5014.44. So the ability for price to rise and pass this particular value is what is regarded as a break of structure. At this point, this very point is where the break of structure happened. At this very point. Similarly, in this case, at this very point is where the break of structure happened. So if we want to easily understand break of structure, like I said, it is just the point where the market proceeded to create a new high. So this is going to be considered the break of structure. May increase the value of the BOS. So this is a break of structure, BOS for short. I hope that is clear. Now for a downtrend, the same thing applies. Same thing applies for a downtrend. There's nothing too different about it. Like I said, In a downtrend, it is categorized by having lower highs and lower lows. So now for you to have consecutive lower lows and lower highs, you are in a downtrend. Now, similarly, for this, after this lower high was created, market proceeded to form a new lower low, thereby surpassing the value of this initial lower low, the previous lower low. Market went below that value. It means it actually broke this price and created a new low, a price that is lower than this low. So around this portion that it broke this price, that is where we have our break of structure in a downtrend. That is where we have our break of structure in a downtrend. Similarly, in this case, our break of structure is here. This is the point where the market went below this initial lower low. Similarly, that's what we still have here. This point is where the market went below this previous lower low. So this is what we call a bullish break of structure, and this is what we call a bearish break of structure. Now let's go to change of character. For change of character, we have something quite different. Like I said, we work in a trendy market for break of structures and change of character. So this is going to be an example of a change of character in a bullish market structure. We have consecutive higher highs and higher lows. Then all of a sudden we see a shift in market structure. Then we start seeing market reversing to start doing lower highs and lower lows. After we have our break of structures lining up in a bullish trend, at this very portion where the market changed from creating higher highs and higher lows to start creating lower highs and lower lows, this is the portion where there is a change of character. This is the portion where there is a change of character, where the market immediately started changing its behavior and forming lower lows and lower highs. It didn't continue creating higher highs and higher lows, but lower lows and lower highs, lower lows, lower highs, lower lows. So this point is where there's a change of character in the market structure. Then break of structure continues to the downside now because we're now in a bearish trend. So obviously, this is like a tool that it's important for us to know where and when the market is about to change its direction. Break of structure indicates to us that the market is going in that same direction. It's continuing in that same direction. But when we have a change of character, at that point in time, we are saying that the market is now changing and about to reverse direction. If it was a bullish direction before, it's about to become a bearish trend. So how do we use this information? Obviously, we go to the chart, then we start looking for points in the market where we can find our change of character, then jump into trades, knowing that we should have a change in direction from that point of interest. So like I said, this is just an indication tool, but we will need to have a point of interest in the first place for us to see that our change of character is happening in that point of interest before we can take a trade in the direction. We just can't come into the market and look for change of characters anywhere and start buying or selling, because it doesn't work on its own. It works when you add other confluences to make sense out of your trade decision. So let's head to the chart and see an example or two about change of characters and break of structures. Now, if you can observe, you can see that our illustration and this market structure says exactly the same thing. We said in a bullish trend, we should be expecting to see break of structures to the upside, and you see consecutive higher lows and higher highs. Then when the market is changing from bullish to bearish, you should be seeing a change of character where instead of having continuous higher highs and higher lows, you now have a lower high and a lower low. So at this point where the market shifted from creating higher highs, started creating lower highs and lower lows, this is where we call our change of character. Then we have a lower low, a lower high, a lower low, a lower high. We should be expecting to see a new lower low, but guess what? The market shifted again, then created a high here, a higher high and a higher low again. So this is how the cycle continues in trading. You keep having lower lows, lower highs, lower lows, lower highs, then change of character, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Then how you use this information is, once you have a point of interest that you want to take your trade from, you are trying your best to always look for a change of character before you take your trade in your desired direction. So I leave you with this video today. I hope you guys can learn a thing or two from this video. You can go into your chart, backtest and study, so you can get very abreast with the knowledge I just passed. Then you try it out in your trading and see how it transforms your accuracy and increase your profitability. I'll see you guys in the next video. Don't forget to like, subscribe, share, comment what you feel about this video. And if you need to reach out to me, all the information to get to me is on my description box, so just hit the link in my description box. You can join my Telegram group if you want mentorship. The link is also there. If you want to trade with the prof firm I use, the link is also in my description box. So I see you guys in the next video. Hope you have a good trading week this week. Peace out.